Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Alcana, along with Brianna Valesky, and we have Cate Long on the line. She's a financial blogger and founder of Puerto Rico Clearinghouse. Cate, it's great to hear your happy and cheery voice.
Hi, Joel. How are you? Good to be here.
All right, let's get right into things here. And we don't talk much about politics here, but since it really relates to, the muni bond market and markets in general, Illinois has got a new governor. How would you like to have that job?
Well, actually, I would not for the pay level that a governor gets, but pretty exciting stuff for Illinois. New Republican governor, haven't had one of that party since 2002. He's a former private equity guy, so he's got a real business orientation. He gave his State of the State the other day and really laid down the law for the unions and said he's coming after them, the public unions. And in my view, that's been one of the biggest problems that Illinois has is the complete control, political control by the unions of the State House. And they've managed to ramp up their benefits and their pay and, all the stuff that the private sector doesn't get. And Illinois is needs some really big substantive changes, and he might be able to do it.
So, would you like for your clients, in your own opinion? I mean, after a long term of maybe avoiding the muni binds of Illinois, is it something that you might put on your radar now?
Yeah, Joe. Last time we talked in December, I raised that as some people should look at. Obviously, it's not investment advice, but states can't go bankrupt, and there's a constitutional requirement or a legislative requirement in Illinois that they pay debt, and in front of all other expenses other than education. And the bonds are yielding now, pretty, for a 10-year, like 3.5%, basically. That's tax exempt. So it's something, people should consider. I mean, the yields there are comparable to, a little higher than corporate yields of the same credit quality. So, like, say, if you looked at a Verizon bond, you'd basically get the same or a little better on State of Illinois bond. So, if people want to look at munis, I would definitely tell them to look at Illinois. And if Rauer, the new governor, does make progress and is able to get some of these legislative changes made, the bonds will go up in value, which means that, not only are you getting a good yield, but you potentially could get some capital appreciation there.
Cate, let's talk about Atlantic City. They've got the new loan and emergency manager, and Moody's Investor Service says that Governor Chris Christie's executive order indicates a bankruptcy filing is possible to help reduce the city's approximately $400 million in debt. What are your thoughts on that?
Number one, don't own the debt unless you're a really sophisticated investor and can get down in the weeds on this one. Unlike Illinois, this is a very complicated legal story. New Jersey's had a history of supporting their supporting their cities fiscally. But this is a turnaround, and Atlantic City has about $400 million of debt. The casino gambling business there has been collapsing. They've lost about half the casinos, so the revenue base is collapsing. It's a poor city itself. The people that live there, not high-income people. So it's like Detroit. They've got this big pile of debt that somehow has to get serviced. And, will the city get put in bankruptcy? It probably should. But that's a political decision the governor needs to make. But definitely stay away from the debt. Wouldn't encourage anyone to look at those bonds.
Did the loan come from the state?
No, this $12 million they did the other day was done by Bank of America, Merrill Lynch. At 5% for 6-month money, which in the municipal space is very high, very high rate. It shows a lot of stress. But that Bank of America got in there and really did the due diligence necessary on the financial side and the legal side.
I don't think I would loan them 12 cents.
Yeah, well, you probably shouldn't. No, when situations get really stressed like that, it's really, you need much more sophisticated analysis and understanding of what's happening. Hedge funds can often go in there. And in this case, Bank of America's big lender, probably has a lot of chits with the state of New Jersey where, that may have been a political favor on their part to the state to do this lending on a short-term basis. So, there's a lot of other kind of things that go into that than just somebody buying a bond.
And how about Donald Trump? Trump, is he, Is he losing his tail there in Atlantic City and just going to walk away from the debt like he's done a couple of
Hmm.
other situations?
Yeah, honestly, Joe, I don't think he has any ownership interest in Atlantic City for years. I mean, I think he licensed his name to some of those
Okay.
casinos, but he himself hasn't had financial interest down there in a long time.
Okay, finally, Puerto Rico has a proposal to raise taxes a lot. What are the chances of that passing, and implications? I mean, I don't know if you could say for the United States or anywhere else. What's your take on the Puerto Rican tax proposal?
Yeah, so this has been discussed for months. I mean, this is like 6 months or something. It's been discussed down there, and some of the newspapers, Puerto Rican newspapers, went to court to force the government to release this report done by KPMG, the accounting firm, on tax reform, which was sort of all the models they used and the projections they used. And the court the other day, required the government to release it. So suddenly we have all this data, showing what the Puerto Rican government thinks it can, what kind of revenue it can get from raising taxes. And basically, they want to do a VAT tax, which would be the first in the United States, very prevalent around the world, which taxes goods and services as they move through every step of sort of the production cycle or sales cycle. And baseline is they think they can raise another $2.5 billion, which would be per year, which would be about an increase of about 22% for revenues. Would be fantastic, which means they would be able to cover their their debt service on their bonds for the most part. The likelihood of passing, I think, at 16% is zero. It is much more likely, and the talk on the in legislature there is more probably around 12%. They'll bring this tax, take 2 years, year and a half, 2 years to implement. So they need some money in the short term to bridge them to to this tax reform. So it looks almost identically like Greece right now, if you're following that story too. There's big reforms going on, but they need some money in the short term to bridge them to the reform.
Before I let you go, we got about a minute before the open here. We always like to get your outlook on the overall bond market, interest rates. We like to follow this TLT, and until the last few days, this has just kind of been saying interest rates aren't going up, interest rates aren't going anywhere. We've had a little bit of a pullback off the highs in the TLT. Just give us your quick outlook on the interest rates.
Yeah, like I said in December, I think rates will stay here or go lower. And I know that was a big call then, but I was right. And it's just that there's very big deflationary forces in the U.S. economy. There's a lot of turmoil politically and in the bond markets, and it's just, I think, really hard for the Fed to raise rates in that environment. Also, the dollar's really strong. So there's a lot of forces going on here, but I think they'll probably delay. They won't move rates in June as many had thought for a long time. And most people are now looking September, into 2016. So I think it'll just kind of stay where we are for the time being.
Okay, Cate Long, financial blogger and founder of Puerto Rico Clearinghouse. She joins us for about as good an outlook on the municipal bond market and interest rates that you can get. Cate, as always, thank you, and we hope to have you on again soon.
Thanks so much, Cate.
Thanks, guys. Bye.